All right, everybody, welcome back to Strongman Personal Finance. Today, we're going to talk about 3 ways that financial advisors screw you over. And this is actually my second time filming this because halfway through the first time, my girlfriend came in and messed up the video. So hopefully she doesn't do that again. Awesome, let's begin. So, what is a financial advisor? Well, it's somebody that's supposed to build you a comprehensive financial plan to guide you to achieve your financial goals, all right? In concept, it's a very noble profession because most Americans suck with money, all right? But what they do is they actually totally rip you off. And I know this because I used to be a financial advisor. Now, it wasn't that long. It was only about 2 months because as soon as I started doing it, I freaking hated the job. I felt like a scummy piece of crap because I was selling horrible products to people, all right? So pay attention to this video, and you're going to see 3 ways that these guys completely screw you over, all right? So how do you become a financial advisor? Well, you got to get recruited, all right? You usually need a bachelor's degree. You get recruited, you pass a bunch of tests, all right? You got to take the Series 7, Series 66, life insurance, health and annuities tests. That's all the stuff that I did to become a financial advisor, all right? After you pass those tests, then you got to go and you got to do sales training. And what these companies do is they train their financial advisors, who are really salesmen, on how to do their jobs, all right? So what you're getting is a sales pitch if you go talk to one of these bozos, all right? Some of them are not bad. That's a caveat. Some of them are not bad. Guys that are certified financial planners, they're usually not bad, or financial advisors that are fee only. Now, there's a couple ways a financial advisor can be paid. They can either be paid purely with commission, which is the vast majority of financial advisors and the ones you want to avoid. And then you have ones that charge you a fixed fee to help you build your comprehensive financial plan. Now, those guys are actually pretty good because they're not incentivized to sell you specific products that their company offers. The commission guys, they're incentivized to sell you the most expensive products because that's how they make their money. And if it's expensive, it's a good deal for the life insurance company and for the investment company and for the financial advisor, but it's not necessarily good for you, all right? So we're going to talk about 3 ways these people screw you over. Way number 1, they're going to give you a sales pitch. They're going to say, oh, here's how much savings you need. Here's how much life insurance you need. Here's where you need to invest. They're going to go over your risk tolerance. They're going to go over your time horizon. They're going to give you a pretty decent comprehensive financial plan, all right? That's how they draw you in. They give you a sales pitch. They overload you with their financial knowledge, which is just a memorized sales pitch their company taught them. And then they're going to start putting you in crappy investments, right? What they're going to do is they're going to put you in loaded mutual funds. What is a loaded mutual fund? Well, in previous videos, I talked about mutual funds, where a bunch of people pull their money together and they use that money, they give that money to a fund management team, and then that team invest in whatever the mutual fund's going to invest in, all right? A lot of mutual funds, you can invest in them for free, all right? You got to pay a management fee when you're investing in the fund because it's not free, but when you initially invest in those mutual funds, you can generally buy those shares without any sales charges. Now, what these clowns do is instead of putting you in mutual funds where you don't have to pay any sales charges, they're going to put you in mutual funds where they charge you an upfront fee just for the privilege of investing in that mutual fund, all right? And this is one of the things that really got me stirred up when I was a financial advisor. So a loaded mutual fund immediately charges you a fee as soon as you invest your money in the fund, all right? So if I put $100 in a mutual fund that has a sales charge of 5.75%, right off the bat, $5.75 is gone. So now you're down to what, 94 something? That's a ripoff. You lost money. Your portfolio has already lost money, and all you did was invest. And these mutual fund fees, these front-end loads, they're to compensate the financial advisor and the investment company they work for. It's a complete ripoff. You can go buy mutual funds that don't charge loads. That's a terrible idea, all right? So these guys are going to put you in these loaded mutual funds after their amazing sales pitch, and they're going to charge you out the butt, all right? So you buy this loaded fund. Well, this mutual fund probably already also has 12b1 fees. What are these? These are recurring sales charges on top of your management fees. So these financial advisors, they get you on the front end. You pay a big fee just to invest, And then over time, you get charged additional money every freaking year. And that just pays the financial advisor to sit on his butt, right? So you're going to be completely ripped off by sales fees if you invest with these guys. You need to learn personal finance on your own or go to a fee-only planner so you can avoid getting ripped off on your initial investments. Method number 2 they use to screw you over: whole life insurance. All right, this is a garbage product. You do not need whole life insurance. What is whole life? Well, I explained it in a previous video, but basically it's insurance that lasts your entire lifetime, right? And the way they do that is they charge you out the butt on the front end, and you build an amazing cash value account. And what that does is that defrays the risk of the insurance company, right? So you're paying a ton of money for this life insurance policy. And what they do is they're like, oh, it's going to protect you your entire life. You're not going to have to worry about your family members if you die. Well, think about it. Do you need life insurance protection your whole life? No, you don't. If you're investing for your future, once you get your kids out of the house and you pay off your mortgage and you pay off all your debts and you have a nice retirement portfolio, what do you need whole life for? So instead of buying a whole life policy, which you don't really need, you can buy a term policy. And that term policy can cover you for some of the big expenses and debts in your life, like your mortgage or your kids' college or whatever. That can cover you for the appropriate amount of time. Also, whole life, when it pays out on your death, right? Let's say you're 80 years old. Well, if you bought that policy when you're 30 years old, the effect of inflation is going to significantly reduce that death benefit. That death benefit is going to be garbage in the future because of inflation, all right? You don't need whole life insurance. It's overpriced. The cash value, you can get much greater returns if you buy term and then invest the difference in a growth stock mutual fund or whatever investment you got. The cash value is garbage. It's not going to build as much value as you think. It's not an investment. It's not a good deal. Don't buy whole life insurance, right? Last reason not to buy it from these guys. When I was a financial advisor, I made all my money from whole life. The commissions for whole life were enormous compared to term, all right? You were pushed to sell whole life insurance. And that's because it makes you a ton of money. So if it makes you a ton of money, if it makes the advisor a ton of money, what do you think it's doing to you? It's screwing you. It's completely screwing you. They only sell whole life because it's more profitable for them. And they coach it as like, oh, it'll protect you your whole life, and don't you care about your family? But really, it's just making them more money, all right? You can do perfectly fine with a term policy, a 30-year term policy, and you can get way more coverage to protect your family. But what they'll do is they'll put you in this crap that's very expensive, and you won't be able to get as much death benefit coverage, which will also be eroded by inflation. Don't get whole life. It's garbage. If you already have it, you might want to keep it until you get a replacement policy that's better. But if you don't have it, don't buy it. And last but not least, this is another thing that pissed me off when I was a financial advisor. So what they'll do is initially they'll start you investing in just regular mutual funds, right? You know, after you pay all those awesome sales charges and 12b1 fees over the course of your investment. And then eventually they'll be like, hey, we have this upper tier investment portfolio that's managed by these really smart finance guys. And what these guys will do is they'll help you get even better returns, all right? So what you should do is eventually, once you hit this certain amount of investment level, let's say you have $50,000, then you can roll your money over into, you know, an overpriced asset management fund. And that'll really significantly improve your returns, and you'll have expert management, all right? They will try to put you in overpriced asset management funds, all right? Which is basically, like I explained, it's just a team of experts at their organization that manages a portfolio that's supposedly, you know, better for you when it's really not. Why is it not better for you? Why is it not better for you? Well, number one, most actively managed funds don't do as well as the market as a whole. They suck. The last statistic I saw, 78% of actively managed funds don't do as well as standard, boring, vanilla index funds, all right? That should tell you something. Number two, they're going to charge you ridiculous management fees, all right? You're going to pay about 2% of your investment a year. So if you got $1 million invested, well, guess what? You're paying $20,000 a year for these guys to underperform the market. $20,000 a year. Now, how do I get that 2%? Well, they're going to charge you a straight up management fee of 1% to go into their specially managed fund. All right. And then on top of that, the underlying investments also have management fees, which are also about 1% or more. So in total, you're going to be totally creamed by management fees. So number one, their investments suck. And then number two, you're paying 2% a year for those sucky investments. That is a terrible idea. Now, you don't have to go totally alone, right? There are better options out there for you to invest your money with professional management. For example, Vanguard. I love Vanguard. They offer a advisory service. I think it's like 0.3 or 0.3% a year for professional management advice. All right, 0.3 a year as opposed to 1% a year. That's 3 times as cheap. All right, that's number one. Number two, Vanguard's underlying investments, their mutual funds, they don't charge anything for management fees or barely anything at all. All right, it's a much better deal. So you can still get professional management and not pay out the butt for management fees. Don't do it. You also have Betterment, Wealthfront. All these places, they are much better deals. They are much cheaper. These financial advisors, they're not going to tell you that, because if they tell you to do Vanguard, oh, well, they're index funds and they don't have professionals managing their funds. It's BS. They put you in these funds because they get paid from those sales fees, from those mutual fund charges. They get paid the 12B1 fees every single couple of months. I think it's like every 3 months. And they get paid at the end of the year. It's screwing you. They're going to put you in funds that their company, their investment company manages so they can make money off you. Whereas if you just took some of the time to learn it yourself, you'd actually have a huge savings by reducing the fees that you're charged. And you'll probably outperform their crappy investments, all right? Now, I'm not trying to sell you anything. I'm really not. This is a passion project. And when I was a financial advisor, this stuff just bothered me. I hated it, and I couldn't do it. After 2 months, I quit. I always thought I wanted to be a financial advisor until I started doing this crap, charging people's mutual funds with sales loads. Complete ripoff. 12B1 fees, ripoff. Garbage insurance that people didn't need. Total ripoff. And then, we have this great management service. It's so awesome. All of it's garbage, all right? You want to go to a financial advisor that isn't trying to sell you crap, all right? You want to go to somebody, preferably a CFP, somebody that charges a flat fee to build you a financial plan. It doesn't push you into crap products, all right? So if you see mutual funds with sales loads, whole life insurance, or asset managements, solutions or whatever they're going to call it, it's complete garbage. Stay away from these guys. Don't let them overawe you with their financial knowledge, okay? I am really passionate about this. This is just not an act, all right? Well, I appreciate you tuning in. Please like and subscribe to my channel, and I'll be producing another video tomorrow. You guys have a wonderful day.